day all. Ira Epstein of Linn Associates with your agriculture wrap-up for this Wednesday, November 26, 2019, about 3:15 in the afternoon. Now, I don't know if I'm going to come into the office on Friday or not. So if you get a weekend update, it's because I decided, okay, I had enough of the holiday. It was great, and I can run to the office. I'm right in this area anyways. But as I look at the grains, you can see down again we go. Corn, a new break low on this. Beans still breaking. Wheat gave back a little bit of the gains that it's put on, but it's been a real chop affair in this. In the stock market, light volume, not doing an awful lot, but it finished off with a little bit of gain there. As you can see in the beans, at this point, we're down 15 cents. So the market under the 18-week moving average, the bias down in that correction, still from that 940 area, continues to drop away. And you can see how just this drop, no bounce at all to it at this point. You still haven't gone through a previous high. Once the market was in this 920 range, it just let go and it's dropped about 40 cents from there. Remember what I told you about moving averages yesterday. We've had a crossover where the 18 has gotten underneath the 200, and it's about to make its move under the 1. That's a real bearish sign. It's called a bearish crossover. Traders will pay attention to that. That doesn't mean, I wish I could tell you that because the cross is over, you're going to go lower, but it's often a sign that there's worse things ahead when you get that. And on rallies, that's an awful lot of resistance now in the marketplace. As we go to the Bollinger Bands, this is called riding the Bollinger Band. And as I told you, when you get an embedded reading and it rides that band, it can be relentless. And that's what this has been. Just one of these grinding downs. Now, will it end up eventually with a big bang? You never know, but it would take some piece of news that we don't know about at this point. It could be an announcement of a U.S.-Chinese trade deal, all that just doesn't seem to happen. We haven't even heard that anyone's going to China yet. So I pay attention to what the chart action is, and you're liable to get that bearish crossover. In the meal market, you're oversold. Unlike the soybeans, yes, both numbers today are under 20. They were under 20 yesterday, but not the day before. So you've got to get through that third day, which it hasn't done. So oversold, under the Bollinger Band, a bit too pulled. When you come to the bean market, notice the difference. Laying on it, but staying basically to the right-hand side of it. This market's called riding it, but I wouldn't be surprised you move back to the right-hand side. Soybean oil getting a bid as they dump the meal. So meal today down 90 cents, oil up 10 points. Not a big change, but resistance all the way back at the 18-day average. In the stochastics, today both numbers got under 20, but they weren't there before. So just an oversold condition. In the corn market, here's your challenge coming up of the lower Bollinger Band with an embedded reading. Market is still in the bear camp. You'd have to close over the 382.5 level now, and that market to negate the downtrend, and the market coming into major support right now at that Bollinger Band. As you can see in the wheat, you went up, unlike the other grains, and you stalled at the opposite, the upper band. That's very typical. Now, wheat is obviously susceptible to weather at this point because we've got that winter wheat that we're dealing with. So the question is what happens? I haven't seen any weather that should make this market take off, but I'm not everywhere in the country either. Sugar market, distribution, what does that mean? You've actually got a higher high, lower low pattern going sideways up here. The bias is up, you're overbought, and you stepped out of a trend. That's what I mean by distribution. Coffee is still in the uptrend fact. It's got the higher lows, the higher highs. It hits the upper bands, pulls back under them, as you can see, challenges them, but it hasn't done anything here to say it's not strong. When we take a look at the Bollinger Bands, both numbers are over 80 today. Both were over 80 yesterday, and both were over 80 the day before. You have your embedded reading. So until the red line closes back under 80, I just look at the market and say, okay, what do we have? We have a market that's probably going to get bought by the pros on the breaks until that gets let go. In the cocoa, interesting. Cocoa, this is a kind of pattern that I don't like to see when you lose an embedded reading. I don't know if the stop should be over here or here. The bigger play typically is over this high, not over this one. But I've seen enough just in the stock indices recently to have me question this. So yesterday you're up 58 points. Today you come slamming down 59, go to the 18-day average of closes and have the concept that when you lose the embedded reading, it goes to the closest moving average. It happened today. Cotton market. Cotton's at a very interesting point. It's got the pattern of lower highs and lower lows that can flip on you like this. If you take out the 86.14, wait, did I say 86? It's 66.14 level. I read it wrong. If you take out 66.14, hit 66.15 until you take out today's low, what happens? Well, at that point, you'd turn the trend up. Now, what is the trend right now? You settled at 65.81 over the 18-day average. So while the swing line is down, the bias is up, the two knock out each other, there's nothing there, and momentum is still pointing to the upside. In the cattle market, breaking out to the upside. Market now over the upper Bollinger Band, could easily pull back under it, but the market is trying to push this narrow sideways action that we've talked about, trying to go up again. Market is in overbought territory, fighting at the upper Bollinger Band, does not have a pattern. It's got the higher high and lower low. That's not a bull or bear pattern. In the feeder cattle, seems to me it might have finished its correction in this zone. And the market now is mounting a pattern of higher highs, higher lows. A close over the 18-day average will confirm it's back in its uptrend. And in the hog market, it's still a lot of sideways action, but what rules the day here? The embedded reading. As long as it stays embedded, rallies like today, even if they turn the swing line up, the bears are getting control there. I did my gold report. It'll be off probably Monday or Tuesday. It's only up 5 business days. So you might want to use this holiday period to take a look at it. I covered in great detail what I think happens in early December, the latter part of December, the part that I think gets exciting into the beginning of the year, where the counts are in the market, if you use price counts, seasonal charts. I'm going to give you the 30, the 5, and the 15 to play with there, and then quarterly, monthly, weekly, and daily charts. It's quite a bit. So if you're looking for a full report, it's on the website. Remember, if you've already viewed our reports a number of times and you don't subscribe, you have a choice. Either become a subscriber of ours, or you can pay for this report. If you haven't seen our reports, it'll be free to you, so there's not a problem there. I'm Ira Epstein. You have a good day, and I'll see you all come, well, I don't know if it's Friday or Monday. We'll see. Take care.